Roger Montgomery from the Montgomery Fund, and welcome to this COVID-19 video update exclusively for clients of nabtrade. Well, as you'd already know, COVID-19 has rapidly spread from China to the rest of the world. Thanks to globalisation and tourism, liberal Western democracies are now dealing with what can only be described as hysteria. What Western liberal democracies, however, don't have is a totalitarian dictatorship that can rapidly mobilise the military to enforce community and economic lockdowns. As you'll see in a moment, delays to ramping up testing and apathy in communities has given the coronavirus more time to spread, resulting in unexpectedly high detection rates and case fatality rates. In mid-January, reports of Wuhan's lockdown were being widely reported in the media, and while a few of us travelled home wearing masks, many were being mocked by those who believed the problem was confined to some remote and largely irrelevant provinces in China. What many didn't realise, however, was how interconnected Wuhan is with manufacturing towns in Italy. In the past decade, Wuhan businesses and labour have become the Italian manufacturers for Gucci, Prada and other luxury fashion houses, which use the expensive Chinese immigrant labour to create accessories and expensive handbags that bear the coveted Made in Italy label. But again, while many in the investment community were tracking detection rates and case fatality rates, we instead were following testing rates. You see, if you aren't testing, you won't find anything. South Korea started testing at the end of January, and they started testing hard, perhaps because of their geographic proximity to China. At the time we're recording this video for you, South Korea, with a population of about 50 million people, has tested almost 300,000 citizens. Each person found to be positive has had their phone seized and GPS used to trace their recent contact with anyone else. Deploying the military, each of those contacts are also tested and quarantined. Consequently, South Korea is a success story with a detection rate of just 3.58% and a fatality rate of less than 1%. Italy, on the other hand, is a disaster. According to our data, Italy started testing weeks after South Korea and more than a month after the virus was first detected in Wuhan. Even today, Italy has only tested 165,000 odd people. Unfortunately, because they gave more time for the virus to spread, they're now experiencing detection rates of almost 22% and a fatality rate of over 8%. Italy is important because it was the first Western liberal democracy to seriously contend with the outbreak, and it informs our understanding of what may happen in the United States. It's been widely reported in the press that I believe the panic would be worse than the pandemic. Just how much panic would occur really depended on the detection rates and case fatality rates experienced by the US. Sadly, US investors couldn't give two hoots about what happens in Wuhan. But once the virus hit Washington or Wichita, we knew they would react and probably overreact. As this table shows, through January, the US tested an average of just 40 people per day. And that's not a misprint. In a population of 330 million people, just 40 people per day were tested in January, and an average of just 92 people per day were tested in February. Remember, just 2 weeks ago, the US President Donald Trump had said the virus was fake news. As of yesterday, the US has ramped testing up to 7,000 people per day, and in the next 3 weeks, capacity for 9 million tests will be available. But what will the US find? Keeping in mind the US began serious testing even later than Italy, we currently expect a very great shock will be experienced in terms of detection rates and fatality rates. For investors, it's important to remember that the best opportunities to buy occur when panic is at its maximum. And when combined with what we call information vacuums, the panic can be extreme. Investors should remember three things. Number one, the panic is likely to be worse than the pandemic. Number two, investing in quality businesses will always do well if a long time frame is adopted. And finally, three, we won't be talking about coronavirus in 3 years' time. It will have passed. For many, if not most companies, you can assume earnings and revenues this year are a write-off. But a company is worth the present value of all its future cash flows, not just next year's. I don't think coronavirus or even the economic consequences will kill off all future cash flows. Provided you invest in a high-quality business or one with high-quality assets or both, you're likely to do well, remembering that the lower the price you pay, the higher your return. Government initiatives to contain the virus will have serious adverse business and economic consequences. So those businesses with near or medium-term equity or debt funding requirements to stay in business may face insolvency. In normal market conditions, especially when rates are as low as they have been, obtaining funding or financing is not a challenge. The information vacuum surrounding the length of the containment measures means access to capital is much more challenging now. This will lead to much more serious falls for companies with debt and those unable to refinance or recapitalise. So it is time to be careful and apply discretion. But it is also time to be ready to take advantage of opportunities, because the biggest risk for those who get too bearish is that a vaccine is announced or central banks and governments come to the rescue in a very serious way. 2 weeks ago, I was asked by the ABC and 2GB whether it was time to buy, and I said it was still too early. But that was 2 weeks ago. While it might still be some way off, with each day we get closer to containment, we get closer to a vaccine, and we get closer to the WHO announcing the danger has passed. You will want to be back in the market by then. I look forward to receiving your questions and hearing more that you would like us to talk about. On behalf of nabtrade, thank you for your time.